Hey, happy Friday, everybody. Welcome back to Swan Signal Live, brought to you by Swan Bitcoin, of course. You can find us at swan.com. We are your partner for generational Bitcoin wealth. John, how's it going today, buddy?
Good, slightly awkward start here for me. I need to do the standing desk right now. I've been sitting too much today, and I forgot to put it up right before we started, but now I'm all good. I'm at the right height here.
Excellent. Yeah, it feels good to stand up, stretch a little bit. Well, it was a little bit of a slowish news week. We're still here at about, let me see, 67,000-ish, 66, 67, hanging out in the 60s. We're going to take a look at the past drawdowns here in just a little bit and talk about, what percent, where's the bottom. We'll see. We'll riff on that for a little bit. Of course, we can't know, but hey, we're sports fans here to talk about the numbers, make some predictions, and get into some federal government stats and monetary stats from the federal government. We've got a few small things to talk about too, but we'll just see where we can fill the gaps today, John. And today, or at first, we're going to start here with a couple of charts that you posted to Twitter that you can take us through to kind of kick things off.
Yeah, for sure. So these come from, we're going to start with more macro topics. And yeah, I agree. There's probably not a ton of action to talk about on the Bitcoin side. The price has been really between like 65 and 69K all week. Obviously, that's just 1 week, but hasn't been like earth-shattering news on the Bitcoin front. Plenty to talk about. We'll get into it, but nothing absolutely massive that's Bitcoin specific.
Yeah.
So the bigger things are kind of more macro this week. The CBO, U.S. Congressional Budget Office, put out their long-term budget and economic outlook. So they make a bunch of predictions. This one is focused on a 10-year period, 2026 to 2036, but they also make some projections out 30 years to 2056. And if you've been on Bitcoin Twitter or macro Twitter for any amount of time, you'll see that when these things get published, there's a lot of commentary around them. The biggest kind of takeaway from these things is that the U.S. Congressional Budget Office, this isn't like some Austrian economics or gold bug or Bitcoin person doing this, right? This is like career government bureaucrats that are going through the numbers and just kind of saying, hey, if trends persist and legislation persists as it is now, what do the government budget numbers look like on a long-term basis? And the two big eye-popping things that they go through, and they always put this on the same page. One is, what's the annual deficit as a percentage of GDP? And they show it here in history. This chart would be more interesting if they went back to World War II, but they go back to 1976 for some reason. And you can see that it hovers around. It's not a straight line. That should be the first takeaway. Depending on what's going on in the economy, it can be lower or higher. The only time it was ever a surplus, this is noteworthy, was the 90s, which people are probably aware of. We had good economy back then. There actually was, I don't know if bipartisan is the word, but there was enough support in Congress to actually cut some spending. And
there was a semblance of fiscal discipline.
Yeah. And
a bipartisan agreement on fiscal discipline.
Yeah, it was bipartisan enough that things got passed, and we actually had some years of a budget surplus. That just seems completely impossible now. So, and that late 90s was the last time we had a budget surplus in the U.S. So now it's just been varying degrees of deficits, And kind of normal is like probably between 1 to 4% is kind of normal, or has just become accepted. And then if there's a crisis, you can see it spiked to 10 or above 10% around 2008 and the great financial crisis. Then it comes back down, but it never quite comes back down to, 0 or 1. It came back down to maybe 3 or 4%. And then it's kind of gradually increasing. And then COVID happens, it spikes up to 15%. And it doesn't stay at 15%, but when it comes back down, again, it kind of resets to a higher baseline. In this case, I think the lowest we've gotten post COVID has been around 5%. We probably got up to 7% in a few years after COVID. Most recently, they're quoting a number of 5.8% annual deficit as a percentage of GDP. And they're saying that it's going to gradually grow to 6.7% over the next 10 years. But one of the funny observations with these numbers is that you can tell they're always predicting gradual expansion, gradual extrapolation of trends. And if you look at that, the numbers from 76 to 2025, what we actually have experienced, there is not a 10-year period where it's just this gradual, slow increasing line or a flat line. Like there's always something happening to make it move pretty dramatically. So I would bet against the line just being slow and gradual for the next 10 years. Um, and before we go to the next one, if you want to lob any comments in, Brady, let me know. But I think the takeaway here is that there's really nothing that would suggest we're going to take deficit spending as a percentage of GDP down to 0, definitely not to a surplus. And final thing I'll add is Scott Bessent, when he's been asked about this, he talks about a goal to get it down to 3%.
Yep.
So even this pretty lofty, ambitious goal from a Treasury Secretary who wants to talk up the ability to manage the budget, he's not telling you balance the budget. He's telling you manage the budget to 3% deficit. So that's like a best case scenario, in my opinion. Okay, next one here. So this is federal debt held by the public. The public here really just means there's intra-governmental debt. So if there's a government agency like the Social Security Administration that holds treasuries, they don't count that, and that is logical. If one part of the government owes another part of the government, it cancels out. So they look at debt held by the public, which is 101% of GDP right now. But that, FYI for anyone, that's the discrepancy. You'll often see total federal debt to GDP. That would be, I think, more like 120, 125. If you strip out that intragovernmental debt, it's lower. And that's what the CBO looks at here. And this one is not, I wouldn't even call that gradual. To me, that looks more like a hockey stick, just up and to the right. And that's what they're saying. They're saying, hey, if things keep going the way they are, we're going to go from 100% debt to GDP to 175% debt to GDP. So this is the current trajectory. GDP, there's two ways that this could be better or worse. We're talking about a ratio, right? Debt to GDP. GDP could be better than the CBO is forecasting. I think they generally forecast like a 2% GDP. If you ask somebody in the administration, they're going to tell you, no way, we're going to be much better than 2% GDP. Maybe they're right, but that's the rough number that they're using, 2% annual GDP growth. And then for the debt, the other part of this ratio, it's at least going to grow this much. This is like a minimum in my view, because they're not saying, oh, what if another GFC happens? What if another COVID happens? And maybe we'll tease a little bit some of those potential big prints. But this to me, this hockey stick to the right is like more so like a baseline of what to expect debt to GDP to do. It could spike up at several different points.
So that's the CBOE report, and that's good coverage there, John. And I think maybe the biggest news of the week actually on the monetary front here is the tariffs. Supreme Court has struck down Trump's tariffs. Obviously, his signature policy, at least that he's highlighted in 2025, struck down 6-3 Chief Justice Roberts wrote the majority opinion. Thomas, Alito, and Kavanaugh dissented. These tariffs were based in law. They were based in the IEEPA, which is the International Emergency Economic Powers Act. It's a 1977 law that gives the president broad authority to regulate economic activity or transactions during national emergencies involving unusual and extraordinary foreign threats. So the Supreme Court said that this did not rise to that occasion, and specifically the reciprocal tariffs, the Liberation Day tariffs, and the fentanyl-related duties on Mexico, Canada, and China. They did not address the refund question. They were silent there, whether the $175 billion already collected needs to be refunded. So that question remains unanswered. Trump had claimed $600 billion in tariff revenue, as the number here just said $175 billion. That was the targeted tariffs, the Liberation Day and fentanyl tariffs. The Bipartisan Policy Center tallied $289 billion gross for 2025. CBP reported $200 billion collected, and the IEEPA specific tariffs accounted for only about $129 billion. So massively overstated numbers that came out of this ruling, that came to light out of this ruling. So, the bigger picture here, this is really, to me, a separation of powers story. The president needs congressional authorization to levy these kinds of tariffs, and the Supreme Court saw it the same way. So it's a blow to Trump, and his signature policy, economic policy, especially global economic policy, and probably domestic as well, right? So this is it's good to see the separation of powers working and intact, and a presidency that's really trying to kind of overreach and expand presidential authority, which is a stated goal, by the way, of the administration and those who surround the president. They're a group of people who've have this philosophy that the president, you often hear it called the imperial presidency. So this is a victory for the idea of the separation of powers and the balance of powers in the federal government. And I don't know economically the outcome of this, but this seems like the tariff numbers have been lower, and I think at least, or lower than Trump was reporting. And I think at least there might be a little bit less volatility and uncertainty after this ruling in terms of tariff related uncertainty.
Mm-hmm. Yeah, I think in terms of market, there's different ways to gauge, where we go from here. There's commentary from the administration, which they've made today. There's commentary that they've made weeks ago, as they were kind of flagging this ahead of time, saying, hey, we might get an outcome in the Supreme Court that we don't like. They have, Trump and Kevin Hassett and others, said, hey, we have other ways to get these make a case for them. I'm not going to claim to be an expert on what arguments they're going to use, what legal precedent they're going to use, but they have said, we're going to try and get the bulk of these tariffs to stay in place one way or another. We'll see where that turns out. I will say, I'm just kind of laughing at it because you kind of almost have to laugh at some of this stuff. But some of the comments today, Trump said he's imposing another 10% global tariff, and that the tariffs that were struck down today are going to remain in effect. So
yeah,
I'm not going to pretend to know where it all ends up. Those are comments being made by the administration. The other thing you can look at is, what is the market doing as a reaction? S&P and NASDAQ are up between 0.5% and 1%. So there's not like some massive rally. I don't think they're really pricing in, okay, all the tariffs are definitely going to go away. Treasuries yields are not really doing much at all today. Gold is up 2%. Silver is up 8%. Hard to say if that's a tariff related price move. If I were going to make the case that it were, part of the CBO projection, we didn't show this part, it's not critical, but when they were saying that the CBO, they were comparing forecasts in the past, and they were saying, hey, actually the debt we're going to add over the next 20 years, it's not going to be as bad because of tariff revenue.
Right.
So there's an argument to be made that says, okay, if all that if all or most of that tariff revenue is going away, then the deficits are going to go blown out even more, incrementally more, and maybe gold is reacting to that. I'm not saying I necessarily believe that, because precious metals prices have been very volatile, and I think silver is responding to idiosyncratic things. But as I look at the market reaction, my general take is the market is still playing wait and see on this one, to see where there's just not enough information yet, in my opinion, to know where this all lands,
Yeah.
tariff wise specifically.
So you mentioned the next 20 years of the federal debt and where it's going, and that Trump was claiming that these tariff revenues would help bend that curve downward. This comes from the Global Investment Strategies, a Bloomberg research report. And this is the national debt chart here with the projection for it to rise by $2.5 trillion a year over the next 10 years, putting the 2036 deficit at $64 trillion. Kobayashi letter wrote that U.S. national debt is set to surge, according to CBO estimates. As a result, U.S. debt will likely reach a record $64 trillion in 2036, doubling from 2023 levels. That would be triple the debt recorded in just 2018 before the pandemic, all while annual interest costs on federal debt are expected to be more than double to $2.1 trillion over the next 10 years. This also assumes the economy will not fall into a recession over the entire period. $64 trillion in debt is now the base case. And they finish with, how did we get here? We were joking before the show that we think they probably have an opinion on that, but it's a good little way to finish up an engagement tweet. Well, John, I mean, let's just lay it out. I think we don't need to make any assumptions, although we, I think, safely could assume that most people listening or watching to the show would have formed a solid opinion about the answer to that question. How did we get here?
Yeah, gotta love how they ended that one. I guess my take on this is it's like, I want to say boiling of the frog analogy to a certain extent, but then there's certain, it's kind of like what have we been doing for the last, really, since, I would argue, since the GFC. Maybe it goes back further than that, but it kind of has been a gradual, maybe you could argue since 1913, it's been a gradual print and then periods of a big print. Like that's just what we've been in. And apologies if you're hearing the New York City sounds. But it's been a gradual print, and then that can go on for a while, for decades at a time. But then there's some crisis and there's a big print. And that just is like the numbers we went through before. Even when times are quote unquote good, we're adding debt. Surpluses are almost never happen. So that it's gradual. That these trends are gradual, and then every once in a while that you get the monetary and debt bazookas that come out. So that is my answer for how did we get here.
Yeah. We are here because of structural truths, I guess I would say, ranging from the structural truth of fiat money, just the way it's engineered, the very basic characteristics of it, to the structural truths of our political system, right? It's not very conducive to making hard choices, and that, including managing a budget wisely. And so the combination of those two, the irresistible power of the printing press, combined with the difficulty to make difficult decisions in our political system, has led to where we are now. And it's just, you need to interrupt one of those two fundamental things, and the former, interrupting or fundamentally changing the way our government works, is really hard to do. It's very costly in terms of like war, or it's costly in time in terms of trying to change it from within. But we do have something that can fundamentally change the other input there, which is Bitcoin, changing the nature of the monetary basis of the world, and that may just be enough to rescue us. That's our hope anyway, right?
Yeah,
The Bitcoiner hope.
correct. And it doesn't mean everyone's always gonna see it like that. Like we will. There might be long stretches of time where people say, hey, why do we need this thing? Oh, the budget's going in a better direction for now. I mean, it was actually interesting that we looked at that deficit chart earlier because I haven't thought about the fact that we actually had a budget surplus in the 90s. I
Yeah,
haven't thought about that for a long time. And just think if you were an investment analyst, a macro guy in the 90s, it might have been tempting to think like, oh, wow, we're going to balance our budget and we're going to get rid of this debt. And this is the new path we're on. And it turns out that was a flash in the pan. That was the exception. And it like just a handful of years later, it went back to massive deficits and a big print.
yeah,
So there might be times where it seems like, oh, why, inflation's low-ish. Why do we need this fixed supply, digital, decentralized, peer-to-peer monetary asset?
yeah.
But I think the long-term trends are just very, very clear.
Very clear. Let's see. Let's take a look here at some Bitcoin related data. We got some ETF inflows data. This is coming from Eric Balkunis. He writes the Bitcoin ETF's cumulative net inflows, the most important number, peaked at 63 billion in October, plus 63 billion in October. Today it's plus 53 billion. That's net only 2 years. Our more bullish than most of our peers' prediction was 5 to 15 billion in the first year. This is important context to consider when writing about the $8 billion in outflows since 45% decline and the relationship between Bitcoin and Wall Street, which has been overwhelmingly positive. Thank you for your attention to this matter. And we have a chart here of the inflows, the peak, and a little bit of a drawdown at the moment from the peak. John, what are your thoughts here on Eric's take?
Yeah, we've shown similar charts to this in the past. It's really meant to just show that there's a huge base of buyers of the Bitcoin ETFs since they were launched a little over 2 years ago now, who do appear to view this as a long-term hold, at a multi-year investment that I think these people are looking at this as. And that includes now, this is, demonstrably true due to they have to file publicly. Harvard owns roughly $500 million. Middle Eastern sovereign wealth funds own in the ballpark similar amounts and growing. I think we're going to get to that. And they're not looking at this like, oh my gosh, it's down 40, 50% peak to trough. I've got to get out. The thesis is broken. There's not a lot of that. I think they have more conviction in it. That is separate from the fact of are other people potentially using IBIT and IBIT derivatives to make very leveraged and risky bets on it? And did they have to unwind and cause a lot of the price decline? That's a separate question. But this shows that a lot of holders of IBIT are looking at it as what I think is a persistent portfolio allocation. And there's not too many of them that got spooked since October, the all-time high. They're not fleeing for the exits in any significant amount.
Let's take a look at this one as well. This is interesting from Jeff Park. This one, sorry. And so he's looking at 13F filings and a company in Hong Kong, a new entity, no public footprint, holding $436 million exclusively in IBIT, positioning it as the largest new institutional buyer, is what he's saying. He said he's speculating this is a vehicle for Chinese capital flight, since Chinese citizens cannot own Bitcoin, or it's illegal for them to own Bitcoin. So they're using an offshore structure to evade mainland bans on direct Bitcoin ownership. So other analysts like Eric Balkunas, who we just heard from, and James Seifert have also kind of chimed in here, and kind of highlighted the broader implications for Asian institutional demand amid China's restrictions. So an angle that I had not seen and is interesting to watch for sure.
So my only hesitation on this one is one of the biggest learnings for me in the last 4 or 5 months is that there are, as I was just kind of alluding to, there are a bunch of speculative, leveraged, dare I say, degen participants in the Bitcoin ecosystem, whether that is spot Bitcoin, more likely derivatives where they can get leveraged exposure, and that includes IBIT options. And that may also require them to own some of IBIT, the underlying. So I just look at this and I say, as much as I want to believe that everyone who participates in Bitcoin is a sound money advocate who wants to see a hyper Bitcoinized world one day, I want to believe that. But I think the last 4 or 5 months have shown us that there is a whole other group of people who just participate in it and don't see it that way, and that can, if they get forcibly unwound and blown up, that can have significant impacts. So I just look at this and I say, which one is that? Is this some fund that's just trying to stay under the radar, and maybe they're like a bunch of degens who are acquiring IBIT for some sort of portfolio maneuver, or is this like Jeff seemed to assume it's the other, that it's like capital flight, people making a long-term allocation to Bitcoin. I want that to be true, but I think we should just hold out for the possibility that maybe it's some speculative trader as well.
Yeah, absolutely. This is not definitive evidence about anything. It's pure speculation, but interesting to watch. And I think we can probably count on Jeff to follow up on that speculation. All right. We'll get into some quick hits. This is from an account that you should follow on Twitter if you're not, the Nancy Pelosi stock tracker. It's pretty good. And so this one is highlighting Representative Byron Donalds, who has filed to purchase some Bitcoin. It's his second purchase within a month, bringing his total investment to 115K. He sits on the House Subcommittee on Digital Assets. We'll be following where it goes. John, what was your reasoning for dropping this into the chat?
I've put it in there just as a quick hit. Anytime you see someone in Congress who owns Bitcoin, I think it's noteworthy. The fact that he's on a subcommittee,
it is still noteworthy at this point. Yeah,
I think it is still noteworthy. I don't want to get into like the potential conflicts of interest. Yeah, I could see that being a conflict of interest. I'm not.
But that's why you have to file these documents. So.
Yeah. And I'm not going to weigh like whether or not he should have done something differently or did he adhere to all the rules. But anytime one of the members of Congress, owns Bitcoin, I think it's worth at least calling out.
There will be a time where it's not something worthy of calling out anymore because so many of them do. But that's happened so many times throughout Bitcoin history. It was early days. If Bitcoin was mentioned at all in any mainstream media publication, even if it were negative, it was a big deal. Everyone in Bitcoin talked about it and shared it, and it was a big deal. And here we are now, where it's just everyone in the world's heard the word Bitcoin, most likely 90% or something have heard the word. It's out there. The brand is out there, and it's in the news all the time. It's on the tickers on the financial news channels and all of that. So but we are still at a point, I think, I agree with you, that it's noteworthy that politicians and Congress people are holding Bitcoin.
Yeah.
Let's see. Speaking of which, we have the Goldman Sachs CEO. This is John's old stomping grounds. He told me that he's ridden the elevator with this guy a couple of times, but you haven't been to one of the parties he's DJ'd. Is that right?
Yeah. This is DJ D-Sol. That's probably what you all know him as first.
DJ D-Sol.
And on the side, he is the CEO of Goldman Sachs.
There you go.
That's actually not a joke. I don't even know if I should be saying is or was a DJ. He made a lot of headlines for this circa 2020, probably. where he was actually going out east from New York, out to the, these ritzy areas like the Hamptons, and playing DJ sets while he was this active CEO. And still, he is definitely still the active CEO of Goldman Sachs today. And he went by the name DJ DSOL.
Gotta love that.
Yeah, people had a lot of fun with that one. I don't know what he's actually doing DJ wise today, but he is still the CEO.
He's like DJing all hands in like the atrium of the Goldman Sachs building or something like that.
We never got to see an in-house in-building DJ event. That was kind of a miss.
All right, well, there you go. Another big name financial CEO is holding Bitcoin and calling himself an observer, straddling the line like an Adonis.
And this was, just to give a little more context on it, I don't think this is a big story. This was a quick hit for fun. Where he said this was at Mar-a-Lago.
Okay.
And it was at like I think World Liberty is one of the crypto projects that the Trump family has or something like that. So it was like a World Liberty crypto type event that David Solomon attended. So I think what this is him just trying to play the part there and say, oh yeah, I own a little bit of Bitcoin.
Yeah.
And he said it's like a very, very limited amount. I don't think this is him becoming a sound money proponent or anything like that.
Let's see. Okay, here's a good clip. It may have been a little bit more appropriate early in the show, but we can come back to it. This is one that you found of a dude. Well, let's just watch it. Here we go.
Well, no, then they say, no. Well, if the grocer also uses it, then he can buy. So what they're really saying is if everybody in the world uses the same currency or the same payment platform, all these frictions go away. But all these other countries are not going to abandon their own monetary policy. So, when it comes to anything about crypto or stable coins, ask the most basic questions and don't settle for word salad nonsense answers. Make them really explain how this thing actually works. And whenever I do that, there's just nothing there.
There's a couple of good things there. I'll let you go first.
Yeah. So this is Neil Kashkari. I want to look up exactly what he is now, but I forget if he's an active. Yeah. Okay. President of the Federal Reserve Bank of Minneapolis. So he's the guy who in 2020 with very wide eyes on 60 Minutes said, don't worry about your money because we have an infinite amount of cash in the Federal Reserve. That is like one of the all-time Fiat comments.
With the wide eyes.
Yeah, kind of crazy eyes.
Yeah.
So what to say about this one? There was like another minute before this clip where he was talking. The lead-in was effectively, they were not really talking about Bitcoin. They were talking more about the people who talk about crypto in general for cross-border transactions. And he was trying to throw cold water on that idea because he's like, well, okay, you're telling me you could send it to some guy over in Asia, but then he has to convert it to his local currency because nobody accepts the crypto over there. And he thinks he has some sort of winning argument. But what I thought that was interesting was he goes, no country is going to abandon their monetary policy.
Yeah.
And he's using that to be like, oh, nothing else is ever going to be used as money except your local fiat currency. Yep. What I think the other interpretation of that is, yeah, Neil, we're aware no country is going to abandon their monetary policy. Please enlighten us on what is that monetary policy.
Yeah.
That fiat monetary policy is at least 2% official consumer goods inflation. Homes inflate more. It's perpetual inflation. It's bailouts for the financial system, helping asset owner, like all the things we're all aware of, right? That's the monetary policy he's referring to. So I hear him say that and I say, you're exactly right. They're not going to abandon that monetary policy. Have you heard of Bitcoin?
That's the whole point. That's why we need an alternative, bro. Yeah. Just ask the most basic questions. Like, I mean, and then he uses this as an example and there's nothing there. Like, it's just such an obvious miss. And then he's trying to be like, everybody I talk to about Bitcoin, and first of all, he's probably not talking to the right people about Bitcoin, is my guess. And they're probably crypto people for the most part. And then he just makes like a completely vacuous statement with an obvious, answer to it in the same breath. Neil
he's
Kashkari.
he's not talking to the mega brains of Bitcoin. He's not talking to Daniel Batten and Pierre Rochard and Matthew Pines and Lynn Alden and a million other people I could name.
Yep.
He's probably talking to crypto promoters who are like, "Hey, you can send XRP from one country to another."
Exactly. Yes, that's who he's talking to. I know how this works. Okay, here's another fun one in the cell phone category. This is a gold bug on Twitter. Bitcoiners, nobody pays gold as medium of exchange. This is a picture of fractions of bars remaining after customers paid in kilobars, along with tool used to literally make change. Now, when you posted this one, I was like, surely this is some a joke, and it's somebody dissing on gold or like pointing out a limitation of gold in the modern world. But apparently, this is in earnest. Is that right?
A
Do
lot of
we
the
know for sure?
comments, yeah, I know this guy enough to know he's a hardcore gold bug,
Yeah.
and a kind of a Bitcoin hater, maybe a big Bitcoin hater. And a lot of the comments on this tweet were, "Is this a parody account? Is this a parody post?" He does not realize what a cell phone this is, because I mean, who is going to use this as a medium of exchange? Like, even if 3 people on planet Earth did this, then he's trying to hang his hat on the fact of like, oh, somebody did it, someone out there did it. That's not really the point. The point is that you're never going to get this. You're not even going to get hundreds of people to do this, let alone hundreds of millions of people to do this.
Yeah, and look at this. This is such very nice, like even fungible pieces of gold to exchange, easily measured in value.
Yeah, I'm
Uh,
sure if you just, clamp down on that massive cutter, you get the exact piece
just
of
very
gold on the other side.
precise, like $100 increments. Good stuff. We also have block fills here, which I don't even. John, you can take this one. I'm not even sure exactly. Are they an exchange? I didn't prep on them.
So I was not familiar with these guys until I think it was last week, might have been 2 weeks ago, when this news hit, that the big number that people are quoting is that they had something like they handled 60 billion of trading volume in 2025. So I think they're one of these firms that does a few different things in the crypto world, like institutional brokerage. But they don't do retail, as far as I know. So maybe that explains why I did not hear them. I don't think you had heard of them, Brady. Most people listening to this probably had not heard of block fills before. So I think they're much more in the institutional world, brokerage, but then also some lending services to their clients. And just recently, it was very soon after that day of from 70K to 60K, just every hour persistently down. I think it was maybe a few days later, it came out that BlockFills is halting withdrawals. And that gave me a little bit of 2022 vibes. It was like, okay, there's some shenanigans going on here. And I'm not trying to claim it's as bad as 2022. Remember, we had Terra Luna, Celsius, Voyager, BlockFi, Three Arrows, culminating with FTX. So, like, really high profile blow ups in the crypto world. Again, I'm not saying it's that bad, but if there is this big institutional brokerage and lender that seems to have blown up, and maybe it's because their clients who they lent to blew up, then maybe there's more shenanigans and failures than we would like to think. And I think if that's true, then you're talking about several entities that probably their failure, their stress contributed to that additional price decline from 85 to 60K. So maybe some of this is still being washed out of the system, or even if it's not being washed out of the system, you might just see people who are now skeptical of where we go from here. They're just kind of waiting before they make another big allocation of Bitcoin, because they're like, hey, I don't know if there's another name that's going to float to the surface here. And last comment, I'll just say this is a Susquehanna backed firm. And Susquehanna is generally viewed as like a pretty elite, savvy financial trading operation. So I just put, and again, so the numbers that we're talking, that the volume they handled, it's pretty big. The last official announcement from Blockfills was, I think, February 11th or around there. So we haven't heard anything from them. There was a CoinDesk article just published yesterday with a little bit more information, but it's still kind of thin. So I think that's a big story, but it plays into this recent price decline that we saw. I think there's, again, entities that caught off sides, had to unwind major losses. I think that is going to be seen in hindsight as contributing to the big price decline.
All right. We have started at Swan something called speakeasies. They're round tables, 10 slots per session, get together through Google Meets and discuss topics, Bitcoin, macro, geopolitics. Doesn't have to be Bitcoin in particular, could be anything really. We're doing this as a way to get together with other people who we have a chance to meet up with, maybe in person once a year or every other year, something like that, and get into a group and have discussions with Chatham House rules, no notes, no AI recordings, nothing like that. Just getting together and talking. We started doing this the last couple of weeks and it's been a lot of fun. So John and I are going to be doing a speakeasy next Thursday at, let's see, that would be, what time we set it for? 11:30 Central, so 12:30 Eastern, on the big print versus the gradual prints. Like what events could force the Fed into a massive print? Will they be able to kind of maintain this current posture of gradual printing? So I just posted this on Twitter. My handle is @CitizenBitcoin on Twitter. And you can find me and sign up. There's 10 slots. John is going to be co-hosting it with me next Thursday. We're going to try to do this on a regular basis to bring in some of our Swan Signal Live crew to come and watch, join us and meet in person and have some discourse as opposed to just listening to us talk. We like to listen to you guys talk. So check that out on Twitter. Citizen Bitcoin is my handle, and sign up for one of those slots. We did one yesterday together on Bitcoin and AI. That was a fantastic discussion. So these are really going well. Would love to have you join us for that. And all right, so let me just make this big. You can check us out at swan.com. We will help you invest in Bitcoin, help you build wealth over the long term. John is managing director at Swan Private, and so he works with clients every single day, every single evening, every single weekend. He works a lot, and that's because he really takes seriously building strong relationships with clients. And I think that's a value that Swan uniquely brings to the Bitcoin industry, is really great, real human relationships in this age of AI, to help you figure out and to accumulate Bitcoin for yourself and for your family generations down the line. So that's Swan Private. We also have an IRA product at swan.com/Bitcoin IRA. There's a nice little calculator down here to play with, set your own assumptions. Super easy to set this up. You can roll over, transfer funds from like maybe you have a Fiat IRA that's sitting there from a previous job or something, and you can move it over into Bitcoin. It's very simple. We'll help you do it. We have some advanced cold storage made simple. This is multi-signature, self-custody, collaborating with Swan so that you can hold your own keys and be a sovereign Bitcoin holder without having to do it all alone. So we've got all the details here. We work with Blockstream Jades, Jade Pluses, and we have people to help you set it up. It's actually, again, like an extremely awesome onboarding experience for a multi-sig custody solution. It is extremely slick, simple. It's great. Swan Generations is coming soon. This is a way to give real Bitcoin to the next generation with a dedicated wallet. Family stewardship. You steward the wallet, you're an administrator of the wallet, and then a clear path for the child to take control when they're ready. These are irrevocable gifts, meaning legally they cannot be taken away from that wallet. They belong to the child, but you steward the wallet until they are ready to take control of it, and you can set that ascension age yourself. So lots of great stuff going on at Swan. We've got more products and services in the pipeline. We would love to have you part of the Swan family and pursue this Bitcoin mission together.
Brady, I swear I was not checking the score of USA versus Slovakia as you were going through that. Definitely not.
What's the score, John?
2-0 USA, men's Olympic hockey.
Fantastic. Well, yeah, check out the Olympics. I haven't really been following it. I should get on YouTube and check out some highlights. I'm more of a Summer Olympics kind of guy, but
yeah, the timing's a little tough on this one because the games are at like 10 a.m. or noon because it's in Milan. So games have been like some in the morning, midday, early afternoon for us. But I'll be watching highlights later for sure.
I'm just waiting for the US-Canada game, letting everything play out, and I'll watch that one.
I don't even know what day it is yet, but we'll see. That should be a good one. Yep.
Should be a good one.
I think Sunday.
All.
Yeah.
Oh, okay, perfect. Good to know. Text me before it starts so I don't forget.
I will.
All right. Have a great Friday, everyone. Great weekend. We will see you next week.